Hi, I'm Patu from freefincal. Yesterday, we saw that the taxation rule for debt funds has been changed with effect from 1st April 2023. First of all, many readers and viewers have asked us, will this affect their existing units? No, it will not. The tax rule change is only applicable for units purchased on or after 1st April 2023. So even if you buy mutual fund units up to March 31st, they will still be taxed according to the old rule of 20% tax with indexation. So only units purchased after March 31st from on or after 1st April 2023 will be subject to taxation as per slab. So we've been talking about this and writing about this, and I had mentioned that many AMCs will start changing the investment mandate of their funds. Of course, it's not so easily possible because of the SEBI regulation categorization of mutual fund rules that are in place. But thanks to reader Piyash, we just published that the Quant Dynamic Asset Allocation Fund has changed its taxation status from debt to equity to fall in line with this rule change, so that it will help its investors. They will be taxed only as an equity fund and not as a debt fund. So the earlier the Quant Dynamic Asset Allocation Fund could have changed its equity allocation from 0 to 100%, but now they will change it only from 35% to 100%. So we'll adjust it with arbitrage so that it falls in line with the new rule. Now, like I said, it's not a good rule because it affects the of course it affects the mutual fund industry. It will affect the bond market. It will also, obviously, the most importantly, it will affect the investors. I have always believed that debt mutual funds are a very special product. Now anybody can open a demat account and start investing in stocks today, and they don't really need equity mutual funds if they are reasonably smart in picking stocks and handling them. But debt mutual funds are a different ballgame. I'm not saying it's easy to do that, but I'm saying it's in principle possible. But even in principle, it is not possible for a retail investor to kind of buy the bonds that the debt mutual funds buy and have exposure in them. Of course, there is RBI retail direct and so on, but that's only in the gilt segment. So uh, I mean, debt mutual funds are really special, and I think investors should be rewarded for the risk that they take. Some people said that the tax arbitrage between fixed income products, fixed deposits, and debt funds have been removed. There is really no tax arbitrage. You can say tax arbitrage only when they are comparable products. If, you cannot compare a debt mutual fund with a fixed deposit. And a fixed deposit with a leading bank, at least you are not taking any risk. At least reasonably, there's no risk. But in a debt mutual fund, you're always taking capital market risk, interest rate risk, credit risk, whatever it is. So they are not the same. And debt mutual fund should have been given a better taxation status. But unfortunately, that is not the case. So we are now going to look at only what can be done. So the SEBI categorization rules are going to play a defining role in how AMCs go forward. Of course, the new fund offers can be changed quickly. That's what Quant has done. Their dynamic asset allocation fund is an NFO. It's in the NFO state, so they've quickly changed it. So that's not a problem at all. But the existing funds is really going to be a problem. Take for example, the rule concerning aggressive hybrid funds and balanced hybrid funds. So an aggressive hybrid fund can have 65% or more than that equity. A balanced hybrid fund is a category with 40 to 60% equity. As far as I know, there is no fund in the market which is actually a balanced hybrid. So people who and also there's a rule that says if an AMC offers an aggressive hybrid fund, they cannot offer a balanced hybrid fund, and vice versa. So most AMCs have an aggressive hybrid fund, and they cannot now offer a balanced hybrid fund unless SEBI changes that rule. But take for example a small AMC like Parak Parik. They don't have too many funds in their portfolio, and they have this Parak Parik conservative hybrid fund. this is now going to be taxed. The new purchases from April 1st is going to be taxed as per slab. But if they wanted to, they can redefine themselves and call themselves as a balanced hybrid fund with 40 to 60% equity, and help investors with equity like taxation status. Of course, they have to use arbitrage to handle the remaining 15% or so, 15-16% of equity, extra equity. They have to use arbitrage and they can easily handle it. So that's easily done for smaller AMCs. But for bigger AMCs who will have every kind of fund in their portfolio, a change is not possible unless SEBI steps in. Now, take again, for example, the definition of long duration debt funds. Long duration debt funds are defined by SEBI as funds whose Macaulay duration should be 7 years or more, if memory serves me right. So the Macaulay duration is a indicator of bond duration and so on. I don't want to get into that math. It's too complex to get in now, and offhand I cannot remember it. But I have videos on what is duration and why it's important and so on. So, but that talks about the definition says the entire portfolio should have a certain Macaulay duration of 7 years or more. That is, it says that the entire portfolio should have long-term bonds. Now, if SEBI can modify that and say the bond portfolio minimum should be about, let's say, 60%, and only the bond portfolio should have a Macaulay duration of 7 years or more, it will help mutual fund AMCs as well as investors to get a better tax status. Of course, the AMC will have to fill in arbitrage to get the taxation status. Arbitrage may not give you returns, but at least it will help you get the better tax status. Of course, what I'm sounding out sounds naive even to me. I know it's a very, very long shot. I accept that. If you're going to criticize me for that, I accept that. I'm being critical of myself here. But what I'm trying to say, the essence of what I'm trying to say is that SEBI should relax their mutual fund categorization rules so that AMCs can adapt and adjust their investment strategies so that it will benefit the maximum investors, because there are many investors who are going to use debt funds more and more in future, and many would have SIPs in some of these funds. So all of them will be affected now, and I think SEBI will have to step in quite quickly. I am told that by viewers in the previous videos that AMFI has um, approach the finance ministry. They will also be approaching SEBI. I'm assuming. Let's see what happens. A reversal of that rule is very unlikely, but if it happens, it'll be great. But even if the finance ministry does not reverse the rule, at the very least, I would think SEBI should be more flexible in the categorization rule so that these strategies can be adapted for the benefit of the investor. Bye bye.